Hey everyone, welcome back to the channel. Today, we're diving into a hot topic, Bitcoin investments. With the world of crypto constantly evolving, I wanted to get a unique perspective, so I asked ChatGPT what it thinks about investing in Bitcoin, and I'm sharing its insights with you. Investing in Bitcoin, like any investment, depends on several factors including your risk tolerance, financial goals, and understanding of the market. Here are some key points to consider. Is it smart to invest in Bitcoin? Volatility. Bitcoin is known for its high volatility. While it has had periods of massive growth, it has also seen significant drops in value. If you're someone who can handle big fluctuations in your portfolio, it may be worth considering. But if you're risk-averse, Bitcoin might not be the best choice. Long-term potential. Many investors view Bitcoin as a long-term store of value, similar to digital gold. The idea is that, over time, Bitcoin's scarcity, with a total supply limit of 21 million coins and increasing adoption, could drive its price up. Diversification. If you're looking to diversify a traditional investment portfolio, stocks, bonds, etc., Bitcoin can be a hedge against inflation and a way to enter the crypto space. But only allocate a small portion of your portfolio. Many financial advisors suggest no more than 5 to 10% in higher risk assets like Bitcoin. Regulation. The regulatory environment for cryptocurrencies is still developing. If more regulations are introduced, it could either positively or negatively affect the market. So, staying updated on laws around crypto is important. When is the right moment to invest in Bitcoin? Dollar cost averaging, DCA. One popular strategy is dollar cost averaging, where you invest a fixed amount of money in Bitcoin at regular intervals, for example, weekly or monthly. This way, you avoid trying to time the market and reduce the impact of volatility. Over time, you'll buy Bitcoin at both high and low prices, averaging out the cost. Market sentiment. Bitcoin often goes through cycles of bull markets, when the price rises, and bear markets, when the price drops. Timing the market can be tricky, but many investors prefer to buy during bear markets, when the price is lower, with the expectation that it will recover over time. Technical indicators. If you're more experienced, you can use technical analysis, chart patterns, moving averages, RSI, etc., to try to predict the price movements. However, predicting Bitcoin's movements is still a gamble given how speculative the market is. Macroeconomic events. Sometimes, global economic events can drive Bitcoin's price. For example, during times of high inflation or economic instability, people might turn to Bitcoin as a store of value. Keep an eye on macroeconomic trends that could influence the crypto market. Risk and timing. Short-term versus long-term. If you're in for the long haul, price fluctuations might not matter as much to you, and you may just want to buy and hold. On the other hand, if you're looking for short-term gains, you need to be aware that short-term market movements can be very unpredictable. Fear of missing out, FOMO. It's common to feel pressured when Bitcoin experiences a major price surge, but buying in during a bubble, a period of excessive growth, can lead to losses if the price corrects. So, always make sure you're investing with a level head, not driven by FOMO. Final thoughts. Bitcoin can be a great investment if you're willing to take on some risk, but it's not for everyone. Make sure it fits within your overall investment strategy and only invest what you're prepared to lose. Diversifying your investments and doing research into the cryptocurrency market, or even consulting a financial advisor, can help you make a more informed decision. Are you already holding any Bitcoin or just considering it?